Good weekend, all. Ira Epstein with your metal market wrap-up, and this wrap-up is your weekend edition for this Friday, September 20th, 2024. Well, fun week, right? Gold finishes off at an all-time high of 26.46. Silver not following suit, doing that, nor is copper. Copper backed off as well as platinum did, so interesting there. If you look at the dollar, up about 10. Most of the currencies were down. Remember, I've now added currencies galore for you. Bonds, notes, all the way from the 30-year to the 2-year, so we can look at the curve yield and what it's doing. And basically, you've got yield still dropping, but dropping more aggressive actually in the back end today. In the energy market, they were down, even with all the mess that's going on between Israel, Syria now, Lebanon. It's all going on. And, you know, it's just fascinating to watch this warfare as it takes off in the ways that it has with going after pagers of all things and walkie-talkies. Hard to believe, but I didn't even know those things were still used. But apparently they're low-tech enough, and that kept the surveillance away from the Israelis, so they planted bombs in them somehow. How do you think that far ahead? I mean, wow. They knew this was coming, apparently. There's no other way to say it. Somewhere along the line, somebody will figure out and they'll track this path. There'll be a movie about this. You can count on it that there's going to be a movie on it. Today there was a bombing in Beirut, and again, another head was taken out, and we'll see what goes on. So at least we're not reading this much this week about Gaza, all right? Now it's about Lebanon. It's got to end. That's all I can say. All right. So it's the week that the rate cut cycle has begun, and this will last probably 2 years. How low it goes is going to be debated for a long time. Fed member upon Fed member that is starting to speak is saying, don't forget, we are data dependent. And I said they would say that. There'll be an argument, and there is one. Did the Fed try to catch up for not having cut in July, or is this trying to get ahead of the curve? I don't know the answer to that. All righty. When we look at the gold market, we'll start off here on a monthly chart. Is that fair enough? You're up for the month 4.7%. On a weekly chart, and these are close only, they're not looking at highs and lows, you're up 1.38%. These are stellar numbers. Look at how this market has just stayed over that average. Look at once you crossed over these 18-month average, you stayed over it. So I know a lot of people don't understand that. You should take my charting course if you want to learn these philosophies. You've got the time. Go in there. It's under the word courses, and you'll see the different courses that I have. The full charting course is where you should start because you learn everything you see me talking about. In the gold, up and away. It's that simple. Again, I want to repeat my stance on it to you. I think that it's a combination of cutting interest rates and stubborn inflation. I don't see the housing, the shelter part of it, dropping dramatically. Could it drop? I would expect it's going to fall back a bit, but the supply's not big enough, and I don't think that these moves yet are big enough to create the supply. You're close. I mean, you're at 6.09% mortgages this week, not near 8%. That's a heck of a drop. But is it too little too late for the year is the question. And I think you get a heck of a better deal buying a new home than an existing home. Why? Work with your builder. They can buy down mortgages from this rate even more. You got time to refinance. Remember, the rule of refinancing is got to be between 1 and 2 percentage points from where you were, and how long you staying in that home, because there's points to be paid. All right, so got to see, unless you have one of these mortgages, and they do exist, where you can refinance them sometimes for free. Everything's in the negotiation of the deal. When you take a look, you can see that the trend is up. If you look at the swing line, and you learn what this is in my course, but it's higher lows, higher highs. I created this when my son was 13. He's 40 now. And I said you can walk into any room and tell somebody what the trend is, if there is a trend, number one. Number two, what would be the stop? In other words, what would break the trend? It would be getting under 2479.80. Therefore, the risk you can figure out, know what each point is worth, and away you go. It was a neat parlor trick that he still uses. Higher lows, higher highs, and here's the neat setup. You've got the 200, you got the 100 over the 200, you got the 18 over there. You got a bullish setup, and you're into the resistance of the Bollinger Band, and at the same time, are you embedded? Embedded occurs when these numbers are going sideways over 80 for at least 3 weeks in a row in this case. So you have 2 weeks in a row there, your third week. It just happened your third week. If I go back another week, you weren't there. So the market is ripe on pullbacks under a certain rule, and I'm not sharing it. It's in the outside day course on pullbacks that it could be bought. The gold-silver ratio. Well, if you're watching during the day, they're in silver. This one's in gold. And that's because you're still over the 18-week average of closes. This is a weekly close-only chart. What does that mean? It means on this chart, until you close under it, it's a pullback in a market that has been much stronger than silver. In the silver market, you've joined into the bull parade. You're getting overbought, but it's finally given us for the first time since back over here in April, May. That's when you finally got the higher lows and the higher highs. You do see that. Now you've got it again. So it's been a while since silver's come alive on a weekly chart, but you are here. And enjoy the run. I expect resistance 31.75, the upper Bollinger Band. I think copper's going to have a problem right here without, again, China doing something. This has been a bear market rally. Why a bear market? Because when you're underneath the 18-week average, you say the bias is down. So when you get the swing line turning up and it can get over other averages, that's where it often goes to a target. Other part of this that's very important. This whole break culminated with getting to the Bollinger Band, the 200-week and the 100-week, and it held. Until you go back under it, you can say a trade bottom is in place. In the platinum market, you are caught in between. In gray, the 200-week average. In green, the 100 and the 18. And no trend. Let somebody else have a good time with that. And in the dollar, I have been bearish. My clients know I've been bearish. They have been bearish. And against these numbers, it was finally time to take some money off the table, period. Wait for a bounce and then try to hit the market again as it is embedded. Could I have made a mistake in coming out and it just falls? I could, but the high percentage traders, you will bounce from there. Now, you put this all together, you try to come up with game plans. One of them is, and I don't know if I covered this with you, you're going to get all this data in the morning, come Monday. Baker Hughes came out with down 2 rigs, but you got Atlanta Fed president, Chicago Federal Reserve's going to come out with their National Activity Index, S&P Global's coming out with their preliminary September manufacturing service sector in this PMIs rather, and you got the Philly Fed President Harker talking. But the bigger thing is in the mornings, how I start you off. At approximately 6 a.m. Central Time, I start recording a morning futures video. And I'll do that Monday through Thursday, barring holidays or illness on my part, or I'm out of town. Most people know if I even take a vacation, most of the time I work. And they get these videos. And I cover all these markets. Specific, buy here, sell there, do this, do that. This is the way to go. I will have losing trades. It's a promise. I will have winning trades. I know that's going to happen. Can I promise it? Yeah, if you follow me, you will see winning trades, all right? I will talk longer-term positions off weekly charts. I will talk shorter-term off the swing lines and the swing trades that they develop. And that's not a day trade. I am not a day trader. If you're a day trader, I'm not your service. If you're a guy that has to have action every day, I am not that guy, all right? I'm sure there's guys out there, but you won't like the track records most of the time. Go to iraepstein.com. Under the word research, it's there. Move your cursor to the top here, and you just go to that, and that's how you join in with us, all right? And once I record them, they're not live, I'll record them, and then you get notice that they're out, and they're out bright and early, generally by 6:45 a.m. Central Time, 7 at the latest, okay? I'm Ira. You have a great weekend. I'll see you Monday morning.